What I notice is you've been making some tactical changes to your portfolios, actually taking down risk quite substantially. Tell us about that.
Sure. Over the past couple of weeks, we've been taking down risk across a variety of asset classes. Looking at the trading ranges over the past few months, we're really at the top end in most asset classes, equities in particular. And looking at some of the risks that we appear or see happening over the next few months, we just think this is a prudent time to be taking down risk. I think in particular, we're worried about tariffs becoming even a bigger issue before the midterm elections. It seems to be a tool that President Trump can use to galvanize his supporters, and that we probably haven't seen the worst news out of that front. Additionally, we're concerned about some of the current headlines on Brexit. Obviously, we're approaching that deadline very quickly with very little in substance being achieved. In addition to Italy, it's something that's been quiet over the last couple of months, but we foresee this new government trying to pass a fairly aggressive fiscal spending program that's really going to put it into conflict with the EU, in addition to just a variety of other EM issues. So just looking at the levels right now, this is not a big strategic call. This is more of a tactical short-term trading call. But, again, taking risk off at these levels and hoping to buy back at better levels.
So what would be the catalyst then for getting back into the market, Sydney?
I think some of the catalysts that we're looking at going into the end of the year is an improvement in China. China, because of the tariffs and because of some of the marginal slowdown that you've seen in growth, the market has underperformed the U.S. dramatically this year by about 20%. It's one of the worst, if not the worst, performing market in Asia. And we think at this point that the levels that we're at below 3,000, it's starting to look a little bit interesting. Again, this deleveraging has seen a slowdown in some of the numbers over the past few months, but we're seeing some sort of stealth stimulus coming through, particularly into the property market, also coming through into some of the industrial commodities, and think that you could start seeing an improvement in that type of data going into the third quarter, which might be a signal to, not only for China, but maybe for a pickup in EM in general.